Good afternoon, guys. Welcome to a new week, Monday the 16th of August. Hope you're all well and I hope you had a good weekend. Well, what's going on with the markets? I was doing some research this morning, looking at a more long-term trend of the S&P, and you can see on my chart on the top left with the red lines here, this takes us back really to April in 2010. And a very persistent, if not a rapid, downtrend forming. Certainly not a clean move by any means, but it's just to bear in mind the longer term trend of what's going on, where we are, and what's happened since the height of the markets in 2010. It's incredibly uncertain, or as Bernanke would say, the markets are unusually uncertain at the moment. Not helped by data such as that came out of the morning session from Japan. Japan's economy grew at less than a fifth of the pace economists estimated last quarter, pushing it to third place behind the US and number 2 China, okay, in terms of GDP and growth. So Japan now the third largest economy worldwide, China up to number 2 spot, and no doubt the Chinese are eyeing the number 1 spot quite aggressively. Will be quite some time until that though, but certainly Japan, their problems continuing, and I think Japan is quite a good example for us now dealing with this recovery, with our recovery, of what not to do and how we don't want to act. Their gross domestic product rose by only 0.4% in the 3 months ended to June. This is a median estimate, 19 economists, but it just reinforces the IMF fund predictions that China is number 2 at the end of 2010. I'm sure that is going to be the case. Also this morning we had European inflation. Those results came out, and European inflation results accelerated to the fastest pace in 20 months on rising energy prices. What you don't want is what the Europeans look like they might be having, as well as the UK economy: slow growth, high unemployment, and high inflation. That puts any central bank in an incredibly difficult position in terms of managing any type of recovery. If you've got inflation and low growth at the same time, then you have serious issues, understandably. So in the 16-nation unit, consumer prices increased 1.7% from a year earlier. And this is just commenting on a report here, adding to my comment that this is going to increase the problems of the ECB's gradual exit, okay, from its non-standard measures of monetary tightening. Let's have a look at what effect that had across the markets. Well, in the Eurozone, it gave the euro actually quite a bit of a bounce, certainly this morning and in the overnight session. And the euro dollar has really been a bit of a spanner in the works, certainly for us intraday traders over the end of last week. There's one thing I noticed, one thing I commented on in the market morning report that you'll be getting out shortly, is that short-term moves in the euro against the dollar on the upside, so short-term moves higher in the euro against the dollar, have at times halted the ferocity of the moves lower in stocks. And this has been a bit of a spanner in the works when we've seen the mini S&P selling off quite aggressively. I'm looking to join the trend. You've got to keep an eye on this currency pair, as when the euro starts gaining strength against the dollar, it has acted recently as quite a strong leading indicator not to be too aggressive with your short positions. Just want to share with you the bund chart I've been looking at this morning, guys. This is on a 45-minute new all-time highs now, 131.89 level reached in the bund. It's absolutely astounding. Let's have a look at a daily chart, and this is from ultra high levels back in July, 127.37, and you can see out of the last 14 candles on that bund chart, only 3 are red, and they're red, tiny red. So the fear in the markets, the demand for government debt, higher than ever. I mean, investors are not receiving, if you take inflation now into account, really any revenue from loaning the German government money. It's a non-return investment. I think that sums up the view of where growth is going, or the skepticism in European economic growth. There's a huge amount of fear out there. Let's have a look at our strategy for today for the E-mini S&P. Well, we're neutral really, but looking to join the entry point short should there be one. It's a similar level to you received on Friday at 10.89. As you can see, this actually turned out to be the high that was hit on Friday. Should we get back up there, we'll look for another entry point short. It's quite a risk-adverse strategy. I'd say we're quite far from there at the moment. But looking ahead, we're very light on the data front. I don't expect any sharp movements. It's perhaps going to be quite a quiet day. Our main piece of data today coming out as Empire State Manufacturing. That's coming in at 130, and we're expecting 8.25, or around 8 really is the market consensus. Don't expect a great deal of movement from that. What's also interesting, if you look at this level of the E-mini S&P, is obviously we started off the week, I'll just change that timescale slightly to a 60-minute. We started off the week a lot more negatively than we ended the week. So this is across Monday, Tuesday, Wednesday, sharp selling, bringing the S&P down sharply. The last couple of days of the week, okay, it was still moving lower, but it formed more of a range than that fear, than that sentiment shift that we saw beginning of the week. So consolidating the losses here at the moment. Obviously our exit point from our short of 1068.50 is crucial to look out for, so do keep an eye on that. But like I say, I don't think the moves so far will be specifically data led. They may be given by a movement in a correlated asset class. Just having a look at the DAX this morning, European stocks, not a huge amount going on there to be honest, still grinding lower, but much as I was describing the S&P, not such a panic, but now moving within a shorter term range. What about oil? Well, not surprisingly, oil has been coming off strongly on the world's revised growth estimates, and particularly coming out of Asia. We're looking for an entry short in oil, 75.95 with a relatively short stop here, 76.13. Neutral again on the commodity. I don't know if any real clear direction can be given today, but we do favour the short side. One interesting point, guys, we had some shipping data as well that continues to point towards a wider deficit in the US. As Americans do spend, they continue to prefer non-US goods. That's another factor to bear in mind in terms of stimulating the US economy. Lost my Euro chart just for now, 1 second. The key level in the Euro, well, it's a bit weaker than it was now, but certainly we were talking a lot on Friday about 1.2777 as a very important level. That happened, that was on Thursday, the bounce. Then on Friday it came in again as a key support and we had a really strong move higher. We then did break lower towards the end of Friday's session, but already this morning that area of support has come into play and it may do so again. However, I think it will have a lot less strength than we have seen during the end of last week. I'm not expecting to hold any further downward momentum, and I reckon we'll get back down to Friday's lows of 127.32. But guys, just bear in mind it's very light on the data front, so there's not going to be a huge amount of action today. Looking ahead towards the rest of the week, we've got German ZEW tomorrow morning. This is notoriously the biggest rat in the kitchen figure that we have, as it tends to be with German data. It gets released or leaked to the two banks, really, Deutsche Bank and Commerzbank, if not the night before, or at least an hour before it comes out. We've got US inflation data tomorrow, as well as housing starts, and then Bank of England minutes on the Wednesday. Philadelphia Fed on the Thursday, and US leading indicators and initial jobless claims really just coming into play. So overall it's quite a light data week. Let's see if this range that we've seen, if this sharp fear in the markets that came in at the beginning of the week can refrain itself and we stay within this range. Government bonds seem to be suggesting that